what is going on in the world. As I woke up this morning here in Australia, we're trading at about 93,000 US, I think, down from the ATH of 120, 123 or 25 or something. So what's going on in your mind?
Yeah, so it's a fantastic question, and a lot of our clients have been calling us not in a panic, but wanting to get some pretty key updates. It's actually a macro-driven move, right? And what I mean by that is it all comes down to liquidity flows. So what happened a few weeks ago, the Japanese bond yields spiked, increased significantly. Now, why does that matter for Bitcoin, and why does that matter for assets in general, whether that be equities, real estate, precious metals, and of course Bitcoin, is that Japan is the world's factory for cheap credit. They've kept interest rates artificially low for a really long time. The Bank of Japan, which is the central bank in Japan, has been buying up Japanese bonds like no one's business to try to keep the yields as low as possible. To do that, they print a boatload of Japanese yen to then be able to go buy those bonds. Now, they've recently come out and said that they're going to ease the yield curve control and they're going to let the market rise a little bit. They're going to raise interest rates. What that means is that, and why it impacts risk assets such as Bitcoin and stocks, is that everybody goes out to Japan, borrows against the yen because the yen is weak against the US dollar and they've got an interest rate difference. So they go out and get leveraged long. And as we all know, what happens with leverage, it kind of comes back in when there's a deleveraging event. And this is actually happening on a global macro level. So the cost of borrowing from the world's cheap credit factory, which is Japan, has gone up. Asset prices have come down, and the US dollar Japanese yen cross rate has come down as well, which means that when people go out, they borrow against their yen, take up US dollars, and then go out and buy assets. If any one of those things change, which is your borrowing cost increase, the dollar yen cross rate comes down because you're levered against it, or your cheap credit slows, then you have this liquidity contraction where people sell assets in order to meet short-term obligations. I think that this is going to be a bit of a flash in the pan. A lot of people are calling for a bear market. A lot of the 4-year cycle bros are, calling top because, historically Bitcoin goes up for 3 years and then down for 1. But I think that applying that thinking or that heuristic is quite short term. What we're dealing with is a liquidity contraction. And whenever the system has a liquidity contraction and asset prices come down and there's cracks that start to form, the response by central banks is to print currency. So short-term pain, long-term gain is what we're talking about.
Okay, so in short, what you're saying is that, is it mainly institutions that are borrowing from Japan? Is that because it's not mum and dads, right? It's not retailers. No, so it's not mum and dad retail. Big time investors. So in short, what you're saying, and this is interesting because one of the great things about being a Bitcoiner that I've found is that I've never learned so much about money as when I became a Bitcoiner. Right? You start off with just learning, how corrupt fiat currency is. But if you stick around long enough with a dog in the fight and your interest still engaged, you learn about all these macro levers in the global financial system, which most of us don't. So I just want to play it back to you to make sure that I understand this stuff based on what you've said here. So, whereas China might make all the physical goods in the world and they're the factory for those things, the source of the cheapest capital, meaning the lowest interest money that you can borrow, has traditionally been from Japan. So American institutional money have been basically doing what do they call it? Is it there's a word for it, an arbitrage, isn't it? Carry trade. So the carry trade, which is basically arbitraging the difference between the growth in US assets and the interest rate of the Japanese money that you can borrow and invest into those US assets. And so what you're saying is because the Japanese government has said, all right, we're putting up the prices. So if you want to borrow our money, we're no longer going to artificially keep the interest rates low. And the way they do that is they print their own bonds and then buy it with their own currency to keep the yields low. It's a Ponzi. Okay, so they basically said, all right, we've had enough of buying our own stuff at a deflated rate. And so the interest rates are going to go up on those large borrowings. And that then has a cascading effect because the people who've taken those borrowings, it rejigs all their calculations and they need to get some liquidity in order to meet their obligations. And so they sell things off. And obviously the first things they sell off is what they believe to be the most risky, which is risk on assets like Bitcoin. Is that kind of a summary in layman's?
You've nailed it, my friend. That's exactly what we're talking about here, and that presents a buying opportunity because
Yes.
these liquidity contractions, they're not because they cannot afford. This is to really, like, we're talking really big macro topics here. The Japanese government cannot afford high interest rates, right?
Mm.
And the Bank of Japan, the Japanese central bank, isn't going to bankrupt their government, nor is the Federal Reserve going to bankrupt the US. They need rates to be low so that they can afford to pay back their own government debt. So it's a short-term liquidity contraction. The rates will either have to be massaged or some other form of quantitative easing or yield curve control will come through at some stage because they cannot afford high rates for long durations.
Yeah, and I don't think Japan is alone in this, right? They're not the only government that needs low interest rates to stay in business, right? The chief among them, of course, is the US. And, you know, I think because we have mostly retail listeners here, and a lot of our listeners are either first time in this, their first Bitcoin cycle, like they've bought within the last 4 years. I'd say that's most listeners. It's really interesting because when you get a dog in the game, even if you own $1,000 of Bitcoin, all of a sudden you're now paying attention to the price and you're exposed to the emotional roller coaster that comes along with it. When you think about the US at the moment, what do you see going on in macro terms in the US with Trump's stimulus checks, what we call stimmy checks? They're going to send out $2,000 refund to every American. This is obviously politically motivated to keep the voter base happy with one Donald Trump. What do you think of the macro things happening in the US at the moment, and how closely linked is Bitcoin's fate to this emerging AI situation where there seems to be this emerging sentiment that AI is about to pop? So let's start with
Yeah,
the American macro picture first, and then we'll talk about AI separate.
sounds fair. With regards to the American macro picture, it's very similar to what we just unpacked with regards to Japan and their need for cheap credit. So even recently, just last night, old Presidente came out and said, I'm going to fire Jerome Powell. Can't wait to replace him. I found the new Fed Reserve chairman because for him, Jerome Powell hasn't dropped interest rates fast enough and aggressively enough for his liking. So he has this one big beautiful bill that's coming out. He's doing all of these incentives to try to, drive up investment and capital into the United States, interest in U.S. equities. He wants to make Bitcoin and crypto, America, the Bitcoin and crypto capital of the world. So he's really trying to push up the GDP and asset valuation of the United States to make their debt look as manageable as possible. And to do that, they really need low interest rates. And that's just not coming for old Presidente quick enough. And so, from an American perspective, I think that interest rates, the stimmy checks, all of the accommodative policies that are going to come out of the Federal Reserve once Jerome Powell is stood down or he moves on, is going to be insane for risk assets. We're talking US equities. We're talking about massive inflows into the Bitcoin ETF. Spot Bitcoin will obviously lift as a consequence of this. I think I remind people you're not bullish enough. You don't want to fight the Fed. The Federal Reserve, and I'm talking about also the president, they want low interest rates. They just have to get it there in a way which doesn't collapse their bond market, and they have to do it in a way which is smart. So there's a lot of financial engineering going on here at the moment, and a lot of it goes over even my head. And I've been in this game for 10 years. The stuff that they do to try to support up their fiat Ponzi is wild. When people say Bitcoin is complicated, I'm like, it's actually pretty simple when you compare it to how central and fiat banking actually works. So the macro environment in America couldn't be more bullish. I think they're, like, again, short-term pain for long-term gain. There's going to be a little bit of volatility in the near term, but I think ultimately they're going to drive rates down and they're going to drive asset prices up because that's just what they want.